Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to the Private Practice Survival Guide podcast. I'm your host, Brandon Seigel. Today, we're doing some quick tips around organizing your financial records for tax efficiency. Obviously, this is a critical part. I know that I hate tax season. I want to get it done as quickly as possible. And so the way you manage your books all year is going to help determine your tax outcomes. And so even to this day, I am looking monthly at where am I at and how am I organizing all my receipts, my write-offs, my expense analysis, everything. And so your ability to make those confident decisions throughout the year is going to help you plan for the best tax planning. And so I typically, just on a high level, I try to have a monthly outlook and then a quarterly outlook, and then I will meet at least 2 to 3 times with my CPA at different parts of the year to ensure we are strategizing and moving forward accordingly. And so as I look at this, I think it's really critical that you understand that it's non-negotiable. Separate business and personal finances. We want to make sure we're not blending them too much. And so it's important for you to understand that, yes, when I am filing my taxes, I file my taxes as an S-Corp for my business, so it's a pass-through entity. So it does impact my personal finances, but I do need to separate my personal and business expenses. The only thing that comes together is at the end, whatever that net profit remaining from the business is, will transfer over into my personal taxes. But I am not putting personal expenses on my business or whatnot. And so when we mix personal and business finances, it's one of the most common and most costly mistakes. And so it clouds your understanding of true profitability. It complicates bookkeeping. It weakens your legal protections and dramatically increases your audit risk. And so I remember early on, I was told, hey, Brandon, put everything on the company. Put your gas on your company, put your car on your company, commercial vehicle, all this stuff. And some of you may do that, and that's fine. You just have to have a really clean accounting system and really clean documentation. For me, what I've recognized is that anything that's not purely transparently black and white business, I don't put on the business. If there's something like, utilization of house or utilization of car, then I'm going to document the miles. I'm going to document the use. I'm going to do an agreement. But I don't just take the company card and use it and be like, oh, well, that could be a business expense. And I know plenty of people do. The lawyer and the accountant that I work with has been pretty disciplined in understanding my role, which my role is I don't want to cross any boundaries. I want it black and white. So, it's important that you have separate business checking, separate business savings, business credit cards used exclusively for your practice expenses. You want your payroll processed as a business account only. Owner compensation draw is a formal distribution or payroll. And so typically I take a W-2 and then I take a distribution. Both of those are clearly documented in the business. When I'm looking at the different accounts, I do have a different business savings account than my personal. So I don't play that game where I pull money out of the business to personal and then pull money out of personal to business. I really treat them like separate accounts. And so I always run extra savings in my business. I would rather be poor and broke personally and have money in my business. And I know that sounds stupid, but for me, I have payroll. I have people. I need to make sure that I am really responsible. And sometimes what we find is that when we are putting everything in our personal, we spend it. And so having those separate accounts, having the tax accounts, et cetera. And so clean bookkeeping is going to reduce your accounting costs. It's going to help you create accurate profit loss visibility for better decisions. You're going to be able to strengthen your legal protections. You're going to be able to simplify audit defense. and payer reviews. And lenders will require it often for loan underwriting. And so obviously, when you're getting loans, they're going to want to look at all these things. And so one of the things that I've done is I've established a monthly close process. And so a monthly close process is the financial equivalent of a practice audit. It's done consistently, it catches errors, it ensures accuracy, gives you a reliable picture of where your practice stands without it, so that there's no financial surprises. And so surprises in business are almost gone as a result. So I'm reconciling my banks every month. I'm reconciling my cards every month. I'm running a clear payroll every 2 weeks, and I'm doing a monthly review. I've got a review of my liabilities, and I manage and automate the P&L review process. Not only that, I have 2 different financial people that are auditing my records. I have a accounting firm and I have an investment firm, and they're looking at everything, both business and personal, to make sure that I'm clean. These are the things we want to do to make sure that we are measuring twice, cutting once when we organize and calculate our tax liability. And so we have to categorize everything, and we need to be consistent. And so working with bookkeeping and working with CPAs. And I want to be clear, bookkeeping and CPAs are 2 different functions. You may have an accountant that does both, but they are 2 different functions. And so with that category, we've got payroll and labor, all W-2, payroll taxes, benefit costs. That's the largest expense category for most practices. Then we have our occupancy category. That's rent, utilities, facility maintenance. I call total facility expense, often the second largest fixed expense. Then we have things like professional development, CEUs, certificate, conference registrations, and clinical training costs. We also have marketing as a category. One of the things that's also pretty large from my standpoint is technology, software, and office expenses. I spend tons of money on software because software replaces inefficiency. So I've got 4 AI software subscriptions. I've got Monday.com. I've got that. My viewpoint is I'm willing to spend 3 full-time employees worth in software because I think it can knock down literally 4 times the staff if we're running it smart. So when you look at my overhead, you're going to be like, dude, your software is high. I'm like, yes, software is, I can have one person do 6 people's worth of work because of software. Hire the right people to manage systems. I come back to that. And then obviously you've got contractors, or you have staffing, or you have different expense lines that you'll utilize with companies that you use. I personally don't use independent contractors, but I do have vendored services that I outsource. Like professional services is one of my category, my lawyer, my CPA, et cetera. And so you could say that's like a 1099, but they don't take a direct 1099. Sometimes you may have someone that takes a direct 1099. These are all the things you want to make sure you're looking at and you're calculating and you're auditing, et cetera. And so they help that process. The other thing that we want to do is we want to look at quarterly where we stand. So meet with your CPA proactively. Do that year in the review, do forecasting, also look back. Where did we have extra expense? What's going on, et cetera. So reviewing year-to-date profit, estimating and paying quarterly taxes. Again, different people have different mindsets. My mindset is get as much off the books as possible so that I am not sitting. Now, some of you will say, hey, well, I can sit on money and get interest. Depends how good your interest is. But for me, I typically am paying 1 to 2 quarters way in advance just so that I am always ahead of what I owe, and I never get into a circumstance where I feel I have more money than I actually have. Sometimes what we'll do is we'll pay 1 quarter at a time, but we'll put all of our tax projection expenses into a savings account, and that savings account accrues interest, and then we pull from that to pay our taxes. Different ways to do different things. We want to start to identify any available deductions. Something you need to look at is, are you taking a standard deduction? Are you going itemized? In past years, I went itemized. This year, very transparently, I went standard, and it just came down to I felt like I was spending more money to itemize deductions than just to take the standard deduction. I didn't have enough need to take an itemized deduction, so one would not have benefited me at the same level. You have to decide your circumstances, but understanding equipment purchases, retirement contributions, other deductions, that you want to plan for. And then continuing to look at entity structure. Are you an S-Corp, LLC? What kind of ownership and how are you taxed as a result? Sole proprietor, etc. So looking at all of that's really important. Something that a lot of us don't do and we need to do a better job of is we need to build a receipt and documentation system. So effective financial management hinges on a robust system of tracking every business transaction, establishing a disciplined approach to receipts, and documenting it is crucial for accurate bookkeeping, tax compliance, peace of mind. You get where I'm going. So I want you to digitize in real time. Utilize apps like Dexter, HubDoc, or Expensify. Capture these receipts immediately via your phone. Eliminate that paper clutter. Establish a weekly review. Dedicate 15 minutes each week to review, categorize, and update any lingering physical receipts. Organize by category, and then make sure that you have documentation in case you were to go through an audit. When we're maximizing deductions, a lot of the things we're looking at: home office deduction, continuing ed, travel related to business, professional liability, business vehicle use, software subscriptions, professional dues, retirement contributions, all things that often we'll use to deduct from as an expense category. Sometimes we're also going to have specific benefits that we offer employees that will count as itemized deductions. So like tuition reimbursement, etc. These are things that I recommend you look at, you look into, and you look at how it makes sense for your practice. So something that's really important is strategic financial management isn't just about growth, it's about efficiency, it's about compliance, it's about avoiding those costly mistakes. And so here's a look at the impact of some smart financial practices. The average amount of small business overpay annually due to missed deductions and poor record keeping, $7,500 in overpaid taxes is that average small business overpayment. 80 plus tax prep hours spent annually by 40% of small business owners on tax preparation, taking away from core operations. There's a potential savings, 30% reduced CPA fees with clean, consistent monthly books, streamlining your accountant's work. And then the 2 times risk of an audit is the rate at which self-employed individuals are audited by the IRS compared to W-2 employees. You have double the risk as a self-employed individual. So understanding that is crucial. At the end of the day, your books are a mirror. They show you exactly what kind of business owner you are, not what you intend to be, but what you actually do with your money. And so some of the common financial record keeping mistakes that I'm seeing a lot of people mixing personal and business. They're writing off their kids' tuition, the this, the that. They're paying from the business. They're calling it a personal. They're doing all kinds of loan repayments. They're waiting until tax season before they look at their tax planning and their expenses. They're not keeping up on a monthly basis with their bookkeeping. They're not using a budget. They're not using multiple savings accounts to distribute money so that you're accordingly categorizing your money right. They're not tracking cash payments. They're skipping monthly reconciliation, and they're ignoring estimated taxes. So one of the things I want to reiterate is it is better to pay estimated taxes upfront and in abundance than waiting to the end, and recognize you can get in trouble. So understanding that estimated taxes is an obligation. Those who wait to the end of the year can still get in trouble even if you make that payment. So just being prepared for that is really important. Some of the different record keeping tools you may look at from an accounting standpoint: QuickBooks, Wave, FreshBooks, they're all similar. I'm a QuickBooks guy, but that's just because that's what my CPA uses, it works, etc. From a receipt capture, I had said it earlier, but I'll say it again: Dext, HubDoc, Expensify, Payroll, Gusto, ADP, Paychecks. There's a lot more, but you get my point. Practice billing, there's all different ones. So some of you will use Fusion, some of you will use Raintree, some of you, there's a ton. I don't have to, Advanced MD, the list goes on. Cario, Tebra is now what that's called, etc. And then there's different tax planning resources out there. And so Healthcare Savvy CPA is a great tax planning. IRS.gov has resources, all different ways for you to optimize and learn about different deductions, etc. And so when we're looking at our key financial statements, we're looking at three different categories of reporting. One is your profit and loss, also known as your income statement. Essentially, it summarizes your practice's revenue, expenses, net profit, or loss over a specific period of time. This is important because this statement reveals true profitability of your operations. It's showing if your services are generated through enough income to cover expenses and ultimately have profit. Recognizing that when you're doing a profit and loss statement, sometimes you're going to do it on a cash basis. Some of it times you're doing on an accrual basis. Cash basis is money in versus money out each month. Accrual basis is the value of that money for the month. So we delivered a value of this that we're going to get paid on. Balance sheet offers a snapshot of your practice's financial position at a single point in time. This is where we see your assets and your liabilities and the owner's equity. This provides a clear picture of the practice's financial health and stability, and by balancing assets with liability and equity helps you understand your net worth capacity for future investment or debt. On a cash flow statement, this is the statement that tracks cash flowing in versus cash flowing out for a specific period of time. And so this is explaining why a profitable practice can still run out of cash. What I want you to recognize is that you can have a positive cash flow and still have no profit in your business. So just understanding these things is critical. And so as we look at our tax efficient business structure, choosing the right entity is really important, but understanding that, how you get taxed as that entity is crucial, and if it's a pass-through, et cetera. And so I technically have an LLC on a legal side, but I use an S-Corp as my tax filing standpoint. And so this allows me to use my business as a pass-through entity, and ultimately I see lots of savings by going this route. I do not have the same self-employment tax that a sole proprietor would have. Obviously, I have employees also, so that's part of it, but just kind of sharing on a high level. So what I want you to implement this week, I want you to open a dedicated business checking account if you don't have one. I want you to open a separate account for your taxes if you don't have one. And I want you to have a savings account that generates at least an average of 4% or greater on your money that sits all connected. I want you to download a receipt capture app and scan your last 10 receipts. I want you to schedule a 30-minute call with your CPA to discuss last year and current tax planning. And in this 30 days, I want you to make sure you familiarize yourself with your accounting software, start to digitize your receipts, establish your routine for weekly expense tracking, develop quarterly tax savings with your CPA. So all of these things are helpful, and I think that they're going to drive you to that next level. And so thank you for tuning into this episode of the Private Practice Survival Guide podcast. I hope that you'll like us, subscribe, and follow us, because together we can thrive, not just survive. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you love this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.